Yo, what's up you guys? Happy Friday and welcome back to a new video. In today's video, we're going to talk about currency correlation. If you don't know what it is, make sure you stick to the end of the video to make sure that you understand exactly what currency correlation is and how you can use it to the best of your advantage. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a weekly basis. And if you do enjoy the content or you find it helpful, please do consider smashing that thumbs up button there as well. Now, if you've been in the trading business or trading game for a long time, or you've just basically got involved, you obviously sometimes wondered, why does one currency go up and why does one currency go down? Or maybe you're just sitting in a signal group, right? So most of you sit in a signal group and these guys are sending buy this, buy that, sell this, and you just go, okay, let me take it. I'm going to take this one, buy. But at the end of the day, you don't understand how this can impact your trading as well. How and why? Because firstly, if you are going to buy or trade the same currencies that are positively correlated, you can be on the wrong side of the market. So let's assume that the currency let's assume that you're sitting in a signal group and someone tells you buy Euro USD and buy gold. What that means is that they're anticipating both of these moves to go to the upside. Now, would that be the right thing to do? Yes, it would. Why? Because they are saying that we can expect the dollar index to weaken, which is why we buy euro against the USD. But they're also saying buy gold, and because gold has a negative correlation with the dollar, we know it is fine. But keep in mind, it's always good to not overtrade. Also, it's best to not have multiple positions running, because this can lead to your account being leveraged quite early. Because if you're wrong on 2 or 3 trades, then you are just going to be taken out of the market. Now, what is currency correlation? First of all, now currency correlation is basically the relationship between the two between two currencies or two currency pairs. It basically tells us, it gives us an indication of whether what is supposed to happen with the opposing currency when this one either goes up or it goes down, or whatever the case is. To give you an example of what currency correlation looks like, it is basically there's a negative correlation between the dollar and gold. What that means is that when the price of the dollar goes up in value, now gold and the dollar, they've got a negative correlation. That tells us that when gold goes up, that means the dollar is supposed to come down. To give you an example of what that looks like, right? So we know, and I'm going to take you to a table that you can basically, it's a website that you can go and visit where you can basically see what the correlation is between these pairs, and I'll tell you how to use it. So when you do think about wanting to jump into multiple trades, make sure you check out the currency correlation first before you decide to take both trades in the wrong direction. So give you an example, right? The dollar is going down because the dollar and gold is negatively correlated. When something is negatively correlated, it means that when the one goes up, the other one is supposed to come down. When they are positively correlated, that means when the one goes up, you expect the other one to go up. Now, it's obviously going to take a lot of research and a lot of time to understand the fundamentals of each currencies or each country's economy, to understand whether they're doing good and the opposing currency, and then do it for the other side. So here's actually a website that makes it a lot easier for you to read the information, and I'll explain it to you now so that you can understand how you can apply it in the market as well. This is not a strategy. This is just to make sure that you don't go into the market and just buying and selling any currencies or any trades that you see, because sometimes you buy a UD USD, you sell NZD USD, but they might have a high positive correlation, meaning that they both go up at the same time, and this will prevent you from making that mistake there as well. Now, like I said, let's first talk about a negative correlation. Okay, as we see, the price of dollar comes down. Now, if we go and look at gold, we obviously expect gold to have been going bullish, right? So you can see here, as the price of the dollar comes down, the price of the gold has gone to the upside. That is what's known as a negative correlation. When the one comes down, the other one goes up. Positive correlation will be GBP USD, which we can see over here. Now we can basically see GBP USD has created a massive move to the upside, and Euro USD also has created this massive bull run to the upside. Now they are positively correlated. Now you come over to this chart over here, and basically what you do want to look for is currencies that are highly correlated. So to give you an example, the guy in the signal group that you are sitting in, for instance, he's saying, guys, I want you to buy GBP USD. Now, based off the analysis that he might have done, in fact, let's use something more complicated. Let's assume he says, guys, I want you to buy GBP CAD. Now, the first thing you're obviously going to do is you're going to go, okay, it is okay. I'm going to buy GBP CAD. That's no problem. It's going to be the only trade that we have running, and you decide, okay, I'm going to buy GBP CAD firstly, right? We go, boom, we buy there. Not the best place to buy, but this is just for as an example, right? And now, man, let's assume you go with a 1 to 3 risk to reward. There you go. Now you've bought GBP CAD. Now you basically, maybe you're doing out there, I'm not sure, maybe you're the kind of person that doesn't have the time to do the analysis and blah 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 blah. Now he says, okay guys, he sends another signal. Now he says, okay, buy Euro CAD. Now you come to the correlation map, and you go GBP CAD, and you look for Euro CAD over here, and you look at what the correlation is between GBP CAD and Euro CAD. You see they've got a very high correlation of 63. Now that means it is okay to go into it. Now there is two ways why you can and cannot do this. So let's not cannot do this, but why you should be careful when you do this. Now let's assume that you can see here the price of GBP CAD firstly has been very bullish, and now we can see that because of the high correlation, the price of Euro CAD has also gone up. Now the thing is, you can, and he says buy this one here as well. You go buy, we're gonna go for that highs, and you are now in the trade. So now you're basically running two currencies, GBP CAD, and you're running a Euro CAD here with both a buy. Now that is good, right? That is good. It's good for the direction bias, but it doesn't mean it's gonna go that way. It also means that if one is wrong, the other one's going to be wrong as well. Now, what is the good or the positive about trading positive correlation? The one thing is basically you can you double your wins, because if the one goes up, the other one's also more likely to go up there as well. Any other positives? I might not know. If you do know of any other positive correlations, anything positive about trading two currency pairs in the same direction that is highly correlated, please let me know down in the comments below. But for me, the only positive I can see about this is a double win. The negative side about this is basically you obviously guessed it, is that you basically increase your loss, or you increase your risk on here as well. So as opposed to losing 1%, you are now losing a 2%. So we're gonna call this I'm gonna do this quickly just so that we can get some there. Now we're gonna go so we're focusing on positive correlations, right? There we go. So this is the in a case of a positive correlation. Now let's assume you go and so now that you guys have gain an indication of why it's important to understand this, so that you don't go in there and just buy and just take every signal that comes through, and you obviously know, okay, I can't buy this and I can't sell this because why? They are negatively correlated. Now Let's use the same example. You're sitting in your most favorite signal group, and the guy sends a girl, or the guy sends a signal. He says, buy GBP cat. Right now, the thing is, he says buy, and you enter your buy. You enter your buy position. Now you are buying, and it's obviously, again, it's not the best prices to buy because you don't want to buy that high, but this is not a breakdown. So now you've got a buy position on GBP cat. Now just 5 minutes later, the guy sends another, or the girl sends another signal, and you go, guys, I want you to buy. Let's look at something that's got a high negative correlation here, USD CHF. Let's assume he says, guys, also buy USD CHF. Now it's your job, right, to come here and go, okay, but USD CHF got an 84 correlation. Now USD CHF should be going down. If it's not going down, then do not give this video 100 likes, right? If it's not going down, because then I'll be lying. So we know that here we got a 84 negative correlation from USD CHF. So he's saying that we're supposed to buy USD CHF. Let's go and see if we should buy USD CHF here as well. Clearly not. You can see how aggressive the correlation is over here, because now if he say that we're supposed to buy GBP cat over here, he says buy GBP cat, and he says sell. I just want to see if I'm able to get them side by side. Okay, I can't because I can't afford it. Cool, I can't, unfortunately. So now he says buy USD CHF, and he says buy GBP cat. Now unfortunately you cannot do these two at the same time. You can't buy USD CHF and GBP cat at the same time. So for that reason, you have to tell yourself, okay, maybe this is a good way, to lose and then to win. But at the end of the day, you cannot, because why? Look, if you do trade on a professional level, then you would know this is not the way to go, because in this case, okay, one could be a win, other one could be a loss, but you know that they both cannot be winners. So in a situation like this, if you see anybody go, okay, now you have to get, and you go, oh, but we can't buy same, two currency pairs in the same direction, because you know what's going to happen. Let's assume that you might be right about USD CHF, right? Because one of them needs to go up. Now this currency pair might go up until there, and you get GBP cat, right? That basically also drops 1%. Now GBP cat drops 1%, right across the structure. It takes out your stop loss, and just when you think you're about to hit a 3% to make up for the 1%, USD CHF also hits 1% from a point of entry and then makes a U-turn. Now if the market does go up for 1%, comes back and it stops you out, now you've made basically nothing. You're at break even. You just wasted your time. But that is why it's so important that you understand which pairs correlates with one another. Now you can use this. There's the website is a very good tool to use and utilize basically your trading, especially if you are one of the people that like to trade multiple pairs and you trade them all in the same direction, or you sometimes don't know if you should buy or should not buy all of these in the same direction. Always come and have a look at this chart first. Sometimes it can be a good thing, sometimes it cannot be a good thing based off the example that I've explained to you now. But always, this will also give you a good point of reference, especially if you're in a signal group where they send multiple signals. It will give you a good indication of whether the person knows exactly what it is that they're talking about, because why you should not be buying and selling currency pairs opposing, against one another there as well. So guys, that is it from my side. I will give you guys a beautiful market breakdown on Sunday. You can enjoy this video. I hope that I was able to answer the question for currency correlations and how you can basically use it to your advantage in the market. Have a blessed weekend. Thank you for your time, and as always, cheers for ears.